Vincenzo's Go Crypto Investing this October the 29th, 2025. Mid-fall noontime update here on Fed Day, and the Federal Reserve is going to again lower interest rates as the assault, brother, the assault on the U.S. is an extreme effect, and it's going to continue. And you can see after a sell-off the last couple of weeks in profit taking, the gold bullion is up about a 0.5%. In futures, got back above 4,000. Gold spot price is sitting just below 4,000. Silver is up 1.25%, and on the spot price is up 2.3% to 48.15. The mining shares have been up slightly today, but not over exuberant as they're waiting to see what the Federal Reserve does, and more importantly, what their future outlook is for next year as inflation is continuing to rise. And I expect, the market expects, everybody expects, you expect it. The universe expects a rate cut today. And what I also expect and what the universe knows is coming is, let me put this on do not disturb before I get a phone call. What we all do expect to happen is quantitative easing is coming back next year, right? I don't think they'll start. I mean, they've slowly started to almost become net buyers again, but they're ending quantitative tightening. It's been over for about a year and a half, but they're just officially saying it's over, but it's been over. Trust me. And they're going to start buying government bonds and treasuries again to try to beat down and knock down that long-term interest rate because they believe, Trump believes, um, and governments and central banks believe if you knock down the interest rate on mortgages and long-term rates, people will buy stuff again. They're not. They don't have any money to buy stuff. If you have an interest rate at 6% and a house and a price at 300 grand that you want to buy, and they can't afford it, or you get a 4.25% interest rate, and now instead of 300 grand, the house is 400 grand. They still can't afford it, right? So the interest rate going down is not going to make them afford it. We need interest rates to rise. We need debt to come down. We need asset prices to lower, especially stocks in real estate. Real estate for sure. Home ownership is more important than stock, right? And we need home prices to come down, but they're so overinflated with asset inflation, and the government refuses and is afraid and will not allow asset deflation, right? So it's unfortunate, but that is what we do need. But I do not believe that's what we're going to get. Today is going to be highly volatile across all markets. I expect the gold market to go haywire. I expect the crypto market to go haywire. I expect the stock market to go haywire like a heart monitor. It goes up, it goes down, it goes up, it goes down, and it looks like you're having a heart attack, right? So I expect that to happen, especially as this afternoon goes on, right? Things that are pumping right now might dump after the meeting. Things that are dumping right now might pump post Jerome Powell's speak, right? So you guys need to pay attention to that and don't get caught up in all the hoopla around day to day and hour to hour, minute to minute trading today. But because the technicals and what we're doing here would only be whatever the macro and the micro technicals are, and the overall theme and the forces of the price action will outweigh whatever Jerome Powell says today, right? On a daily basis. But you can see the Bitcoin price is at a critical spot because the Bitcoin price is sitting here now consolidating just at current price below the 50 and the 100-day in the daily time frame. It's a very critical spot for it to be at, and it's a very critical area that it needs to get back above, right? So this is what we're watching out for. Just today, no different, besides the Fed wants to talk today and get on TV and get some airtime, right? It doesn't change the fact that what we're looking at is the overall structure of the day to day and week to week and overall long term structure of the Bitcoin price, right? And you can see we wick down today. We're sitting just below the 50 in red and the 100 in the daily in blue there, but comfortably above our major support level at 108, 371 and 30 cents, which is in green here, which is the 200-day in the daily. And obviously, this is the 50-day moving average in the weekly time frame, not the daily time frame, but the weekly time frame, right? And that's what's sitting down right there. And if we uh fall today, and just like we've been talking about since we came off this high and broke and looked to me like a confirmed breakdown with price action, spike in volume, That is a confirmed structural change on a breakdown. This was just trading out of it. No spike in volume, just trading sideways down, no spike in volume. This was a major 15% swing high to low dump. And that's why on this return rally, if you can't hold this and get back up into this 3.5 year pattern support, you're threatening if you come back down to the 200-day. I don't think you're going to be able to hold it because of all this that's already been exhausted on it, right? And then even farther back, several months ago, right, when we hit it. I don't think it would be able to hold. I think we would come down. I think it would come down if we came back here, and I think the 95,772.97 would be in play. Conversely, if we can continue to hold this, this is your next upper resistance. Obviously, it doesn't. You don't need me to tell you that, and that's at 125,621, right? And then if you want to get super bullish to move to the next level, like the 156, then you jump well back into this rising channel and get up into this, hold it, and then continue up. And that's how you could push towards that $200,000, right? Or you're going to start trading to the downside, and this might be trying to signal some kind of a short-term, technical, prototypical playbook, topping out short-term pattern here in the Bitcoin price, just like we had back here. But this was more of a orderly consolidation. Back from springtime to Trump last year, and this was more of a mountain double topping quickly, right? So this is very interesting because if it does trend down, it would come towards that 79,000. And say in 3 months from now, where everybody's expecting, everybody across the sphere is expecting a massive rally into the holiday season and to start the new year, just like it's been the last, ever since the COVID, right? Ever since after COVID, 2021, 2022, 2023, 2024. Every year it's been spring dump, fall and winter rally, summer rally, right? It's been fall, late fall pump, going into the holiday season pump into the new year, right? And then topping out and dumping in spring, pumping in summer, dumping in late summer and early fall, and repeating the cycle. But that's only a new thing since the COVID. What if it doesn't do that? What if this year, because everybody thinks the next 3 months we're going to 155 to maybe 200,000, not just hot pie in the sky, rogue people, mainstream, everybody's saying it should be 200 grand possibly by the end of the year into the 150s. What if this time, because it's been a recent trend that it's been pumping in November's and December's and then topping out in January, right? And then starting to turn around in February, um, and then all out collapsing or the sell off, I mean, in the springtime. What if it does the opposite because everybody thinks it's going the other way based on they know the Fed's going to be doing quantitative easing, should be in theory bullish for Bitcoin, according to everybody. Going to be lowering rates, should be in theory bullish for Bitcoin because it's putting risk on, right? There's going to be lots of liquidity, and we know Bitcoin and crypto needs lots of free flowing, non-fearful liquidity, right? But what if this time, even though everybody knows it, it's going to be delayed and it's going to have a correction down to 95,000 and then 79,000. That's all I'm saying. And that would bring micro strategies and everything looking a lot different in the minds of the crypto sphere if that happened. That's something I'm watching out for. The Ethereum price also, I got to keep this moving along, is sitting here just below. And I'm going to get rid of these. These are our bullish and bearish options. And you can see right now we had that brief pump up to just above and right at the 50-day moving average. It could not hold it. It's sitting just below the 100-day moving average and below the pattern neckline resistance, which is the megaphone neckline resistance now because it's below it. And if you can't get back on top of that, the bearish side is what we talked about the other day, the 35.96, the 200-day would not hold. We would have the full candle body on the 34.66. Could be a rally, but if it's still bearish, then you come down to the bottom part of the screen, support and resistance box at $3,068. If you want to get bullish, what everybody expects, because there is a $10,000 target off of this megaphone pattern, but that doesn't mean it's today, tomorrow, next month, or next year. That's just if this thing ever is able to play out, that would be a target you would look at, but that doesn't mean that ever has to happen. And the short-term structure of this is if this is to get up there, you have to get back and break above this megaphone pattern and then reattack the 49.60, which is the all-time high. And you can see that was over a few years where you hit the megaphone resistance in March of 24. Then you got close in May of 24. Then you hit it again in December of 24. Then you got close in August of 25. Then you broke out, right? And then you've been trading along it for the last month, month and a half, 2 months, the latter half of summer into the beginning of fall, right, of 2025. And that's what you need to break to start to do that. But if this starts to go down and trade down where nobody thinks it's going to trade down, it's going to be very interesting and catch a lot of
Days
people
are
off
right around
guard.
the
But you
corner,
need to get
and
above that
my wife
megaphone
and her
neckline
family
resistance if you
have
want to get super bullish
quite a
again.
few traditions
The
for
XLM
Christmas
price is sitting
time,
here where it
and
pumped
they
up
are
beautifully.
starting to
We had a
get
freshly minted bearish
rather
cross where the
expensive.
50 you can see is well
For
below now
example,
by
This
almost a
LSU
cent,
coaching search
below the
is
100-day moving
one of the
average,
biggest
which
stories of the
is the
year,
medium
and
term
I
moving
am
average, right?
monitoring it
And when the
closely,
short
and I
term
did want to
moving
talk about
average
it for
gets
a couple of
below
minutes
the
because
medium
I've talked
term,
to
that's
people
a
all day
bearish
about it, talked to
cross,
people
right?
the
And then
past
if
couple of
the
days about
medium,
it.
the short term gets below the
First
long
bullet
term, the
point I have
200, and
written
that's
right
a
here.
super bearish cross
Show
or a
me your staff.
golden bearish cross,
That's what it's going to
as
be
old
about in the
Vincenzo
LSU
calls
coaching
it. You
search,
can
in
see
any
we weren't
coaching
able
search,
to
but
get
especially
above
this
the
one. You got to show me the
200-day
staff.
moving
Okay, there
average
is no
as of
candidate
now.
out there that I look at
And we're sitting
singularly
right
anymore
on
in
the
these
50-day
searches,
moving
and I
average in the
say,
weekly
oh,
time
if
frame
you
and the
land
bottom part
him,
of the screen
ball
support
game.
resistance
If you
box.
land
If you
him,
break this, you're
it's done.
coming
It's a
way
wrap.
down
It's a
to
grand
the
slam.
next
We
level.
cannot
And the
use that
next
kind of
level
language
is the
anymore.
100-day
We
moving
got to be
average
better about
in
this. We got to be
the
smarter
weekly
about
time
this on
frame.
this
And we've been on
campus,
top of
on this
this
show at least.
ever since that
So it is
fateful
about
dump
the
almost
staff
3
you
weeks
can
ago,
bring
if you
with
can
you.
believe that or not.
If I'm going to
And so
hire Lane
far, we've been
Kiffin, is
trading in
Pete
a
Golden
bearish
coming with him?
sentiment, right?
Charlie Weiss Jr. coming
And
with
that's
him?
what we'd be
Is
looking
Pete
at if
staying
you
to
go
take
to
the
the
job at Ole
downside.
Miss? Like, how
If you
does
can
that
try to
happen?
pump up
How does
to the
that work?
upside and
I
show
need
what
to
we
know
have
that.
drawn there and
I'm using
still
Lane
end up
Kiffin's name
at
because
the shit
Kiffin's on the
house
top of
or
a
a
lot of
local
hot
shit
boards.
house, not
But
the
if
shit
it
house, but
wasn't
a local
Kiffin,
shit
if
house
it was
on a big
Marcus
hook
Freeman, if it was me, if
bearish
it was
reversal
Jess, if it was
pattern.
whoever, who are you bringing
You
with
got to
you?
get back
And if I'm
above
an
this
athletic
and stay
director,
above this 50-day
man,
moving
or if
average
I'm
and try
if
to
I'm making
reattack
these
this
hires, period,
200-day, and then you
I
got to
got to
take
have a
down the moving
really good
averages, right? And
indication,
try to get
especially with
short-term
what we just
bullish.
went
And
through
that's
here,
something that could happen
with
based
what
on the Fed
Brian Kelly
talking
put on the
today.
field the first
But
couple of
there's
years
everyone
before
thinks
I
these
know
are just
you're
going to
my
pump
guy.
right
I got to
now.
know who your guys
Everybody
are,
went
who
all
you're bringing
heavy.
with you.
Everybody
So
loaded up.
Pete
Everybody
Nakos,
probably
who works in the same building we're
re-margined
doing
to
this
the
show in right
long
now,
in
because
here
we do the
on
show
this
from the on.
dump. And anybody that had any cash or anything up, they sold to go all in because they looked at that as a once in a lifetime dump. And there hasn't been in the couple of weeks since then that reactionary massive pump, right? What if these things have to go down just like they always do to near pre-pump levels, which you can see how far down near pre-pump levels are. That's 14 cents, that's 18 cents, which we hit 18 cents once since pump. So that'd be like 14 cents. What if it does that and catches everybody off guard as the gold and silver bullion market does what it does and continues to go to all-time highs in 2026? I'm not saying this is going to happen. I'm just playing devil's advocate because something seems off to me. Something seems mischief and out of whack because everybody is super bullish, even though a record breaking billions of dollars and millions of traders got liquidated here on leverage. Everybody is re-levered up to go long, and nobody thought that was a problem. It was just a short-term leverage flush. What if it wasn't? It showed you lack of liquidity. What if there's an underlying short-term problem in the crypto market right now, and these prices have to come down because everybody, including retail, is super bullish, all in, even after this manipulated, liquidated flush for leverage to get played out? What if there's another drop coming to really put the pressure, really put the heat, and to shake up the last 3 year that everyone's playing off of? Pump in winter, dump in spring, pump in summer, dump in fall. What if it's starting to shake up now and there's going to be a short-term fluctuation and a short-term audible to maximize the hurt for retail investors, right? I'm not a financial advisor. I'm not telling you to buy or sell or trade or do anything. We're just here to try to become asset millionaires together via smart investing, education, and information that we have here with Truth and Trust, 401k steady investing. That's what I do, right? Uh, Gold and silver bullion and mining stocks. That's what I do. Um, Real estate. That's what I do. Paid off home. Zero debt, no credit card, no car payments, no debt. That's what I do. Cash on the side, earning 3 to 5%. That's what I'm doing, right? So you got to be doing things, and that's what we're here. I'm just here to share. I'm just got to time check this. 12:15, we're good. I'm just here to share what I've been doing, uh, and hopefully give you a different perspective and some thoughts and some things you never thought about uh, to to uh, to help you invest, right? And that's what we're here to do. You can see the XRP price after it came up to 366 uh, is sitting here just below the 50-day moving average where it got rejected, but just above the $2.55, a horizontal left to right in yellow there, which has been a very critical short to medium term support level going back to last winter, right? After we had the big pump. And you can see we're sitting just ever so slightly above the 200-day moving average, but getting rejected by 1, 2, 3 days in a row. This is the third day. In the daily time frame on the candle bodies, right? And if this breaks back down to the downside and it cannot, I repeat, cannot hold that 255, it's coming right back down to the 50-day moving average in, that's right, the weekly time frame sitting, yep, at 233, where we have circled where it came down to and where the most amount of buyers were at. So that chipped away, and that's what really stabilized the price uh, during that massive 45% flush on liquidation was a lot of buyers stacked here. But that leads me to believe if for any reason this comes back into this weekly time frame area, these buyers that stabilized it are gone. The wall's been chipped away, broken away, rusted out, leaked through, and eventually it's going to crumble beneath itself by the weight over top of it, right? By erosion, and it would break right through that and come down to the $1.77 mark, right? And that's something that I'm watching out for. If this doesn't hold this 255 and starts to trade back down there, I am not anticipating it to hold the $2.33 if it goes back down there, right? If you don't want that to happen, you got to use this consolidation to slingshot you over these two other moving averages, the 50 and the 100. Hold that as support and then make your next run to 307, major upper resistance. Because if you break that major upper resistance, that's where the dreams, that's where the hopes, that's where the vision, that's where the leisure and profit of that $3.66 regional high comes into play, right? But it all has to be started by breaking these key overhead levels. And a lot of that's going to start to move today with the Federal Reserve. And I believe there's going to be a lot of ups and downs in a highly volatile market today. Bitcoin, here's a breakdown of where things stand with the Bitcoin and alt season. Bitcoin live is at 113,000. The CME, the altcoin season index, a metric that measures how many 100 altcoins are outperforming Bitcoin in the past 90 days. If greater than 75% of the top 100 altcoins outperform Bitcoin, that's alt season. That's how it's defined, right? If 25% or less outperform Bitcoin, it's Bitcoin season, which we're in. Recent readings show an index at 32 in July of 2025, well below the 75 threshold. Historic context and seasons, while there's no uh, neat chart of every single price cycle sources. In early 2021, H1, we saw strong alt season. Many top altcoins massively outperformed Bitcoin, and dominance fell from 62 to 40. We covered that live for you with Vincenzo's Go Crypto Investing. The methodology, CMC index uses rolling 90-day performance of top 100, excluding stablecoins, wrapped tokens versus Bitcoin. Uh, Academic work shows seasonal calendar effects in Bitcoin return and volatility month over year, day over week throughout varying sources. Current state most skewed towards Bitcoin dominance. Alts are not outperforming broadly. Index is at 32. Altcoins outperform Bitcoin, outperformed by a large margin, and BTC dominance dropped significantly in past alt season. We all know that. So that's where we need to be, and we're nowhere close to that right now. And then before I let you go, and I got to get back into this uh, job, as they call it, um, I got something else I wanted to read for you real quick. We did use, get out of there, GBT, because it's easier to look up. Quantitative easing, I'm expecting quantitative easing to be ending, or quantitative tightening to be, it's been over, but officially be over. And next year, we're going to be massively uh, quantitative easing is going to be massively flowing, and they're going to be buying bonds and treasuries. Potential price movement drivers. Ending quantitative tightening prevents further liquidity drains, right? And we know Bitcoin and crypto needs fear-free flowing liquidity, right? The increased liquidity often seeks higher returns, making its way into risky assets. Price effects, strong buying pressure leading to a significant upward trend. Lower interest rates reduce the return of holding safe assets like savings accounts, money markets, funds, or government bonds. Investors are incentivized to move capital out of low yielding cash, bonds, and into higher risk, higher reward assets like Bitcoin. Uh, with Bitcoin, and then that supports rallies. But that can be a devil's game, because if it's just a false signal by the government manipulating markets and interest rates, you're throwing your money into the fire. You're throwing your money into a situation that is on teeter's end, and on the brink of a mass collapse, when you think everything is strong because there is no yield to be had in savings or bonds or CDs, which usually means we're red hot, we're firing on all cylinders, we're out of debt, we're having mass job creation, mass wealth, uh, very low standard of living, right? Costs are low, inflation is non-existent, right? But that's not what's happening right now. They're manipulating artificially. The initial assessment of the end of QT and subsequent rate cuts can lead to short-term volatility as the markets digest the news and position itself. Price effects, potential sharp swings both up and down. Important caveat: macroeconomics, periods, and factors markets are forward-looking, and the end of QT and rate cuts are widely anticipated. Much of the positive price action may occur before the official announcement, and ooh, that's what's called. Uh, it's been known for so long that the price of that asset has baked that news that wasn't released but will be released into the price, and it doesn't really fluctuate it much after the news because everybody knew it was coming. Just like everybody knows there's rate cuts coming today, so it's not going to be to any surprise when there's a rate cut. Like the channel, subscribe, peace, and the rock side, bro. Okay.